Raise interest rates, you get a recession. Raise interest rates, you get a recession. Raise interest rates, you get a recession. So what are they doing now? Well, they're raising interest rates. Oh, I don't know. What's going to happen? No idea. I have no idea. That's what those in the financial industry are saying. That somehow they're going to be able to withstand what's ahead of us. They all think it's going to happen, but they say, you know what, the Federal Reserve, they're going to make sure it doesn't hurt us. Well, what happened back in the financial crisis? What happened during the dot-com boom and bust? What happened in all previous recessions? The Fed was there for each and every one. But somehow they couldn't figure those out. But this time around, they're going to be able to do so. They do it on purpose. They crash the market on purpose. And they do so to, number one, consolidate wealth, because everything crashes down. Guys like Warren Buffett come in and buy things up for pennies on the dollar. They're sitting around with big piles of cash. Why do you think all these companies are sitting on massive piles of cash? They're waiting for the recession, and then they go in to acquire different companies. They're going to make incredible deals, incredible acquisitions. How genius is this? They sit on billions and billions and billions of dollars. Recession comes, they start buying companies that are normally would be valued such higher, and they're able to buy it for pennies on the dollar. That's a genius plan. But guess what? It happens every single time. You can predict it. You can plot it. The day it's going to happen, I don't really know. I made a silly little, assumption based on where they're going to do this. I just think that it's not going to be able to hit the level of 3% without a recession. It doesn't make any sense to me. I wasn't going to rant on about this, but I think I've made my point very clear, and it has to be said. And I'm glad that I was able to lay that out for you right there. Let me read this one more point before I go on, right? The Federal Reserve's approach to the implementation of monetary policy has evolved considerably since the financial crisis, and particularly so since the 2008 when the FOMC established a near zero target range with the Fed funds rate. At the end of 2008 through October 2014, the Fed greatly expanded its holding of longer-term securities through the open market purchases with the goal of putting downward pressure on longer-term interest rates and thus supporting economic activity and job creation by making financial conditions more accommodative. They actually say, right here, expanded holdings of longer-term securities, okay? Buying up garbage. Let us buy all that, let us print money, buy garbage, and that will push interest rates lower. But they're now weaning off of all of that. And what happens when you wean off of that which they bought, which puts interest rates down, which supposedly gets the economy moving again? Stock market anyway. Ultimately, we're going to reverse course. Are you ready for what's coming? Everybody knows it's coming secretly, but you can do yourself a misdeed and bury your head in the sand. If you bury your head in the sand, it's not going to save you. Now, I have so much more to cover, but I think I'm going to actually just be transparent. I'm going to flip forward into this and do this on other charts I had there on a separate video. Let me get into this right away. The soft data, the data that actually you'll hear in the news more often than not, has been declining. I mean, ever since late last year, this has been on a downtrend. Now, the hard data, I'm not even sure where the hell they're getting this, but that also has been on a downtrend. I don't know how that ever came up throughout 2017, but here we are. Both of them, along with the stock market, have been ultimately hurting throughout this time. And the Chicago PMI down as well. I've seen other statistics that would be mirroring all of this. I mean, we're looking at levels going back. I mean, you can look at so many different indicators. In this case here, we're going back to 2017, but I've shown you so many that mirror what we had seen throughout, financial crisis or dot-com boom. We're going back so far, and that isn't good. But you can look at a million different indicators. Ultimately, the central bank is the one deciding when the crash will be. They decide if stocks will go higher. They decide if stocks will go lower. Now, many people have suggested, well, if they see that the economy is starting to take a tumble, the stock markets are coming down, they will just print more money. That's what I hear. Heard it many times before. Makes sense, right? But, there's something about the Federal Reserve, the Bank of Japan, the ECB, the Bank of England, the Swiss National Bank, and every other central bank. And that is, they never, ever seem to do that. So why is this time different? If they've never done that before, ever, why are they doing it now? I need an answer. I need a realistic answer, because there isn't one. Except what I explained earlier. They purposely crash the markets to consolidate, number one, consolidate wealth. Number two, consolidate power and control. I think I've made my point more than clear. I'm going to end it there. I hope that you enjoyed this video. A lot of people are taking risk because they've put their money in knowing, they're thinking, look, I know this thing's going to crash, but I'm losing out. And I have this fear of missing out. So they put their money in and hey, their assets have appreciated. They haven't made any money because you don't make money until you actually sell, of course. But their assets have appreciated, and they've been watching this, and they've thought this is a good thing, and it absolutely is. But the question is, how will you be able to time getting out? Because oftentimes we see in bull markets that people don't get out in time. The average person, most people, like almost all of them, do not get out in time because there's no little bell that's going to ring. There's no siren that's going to go off. The confetti starts falling from the sky. There's no signal that you're going to get that's going to tell you that, okay, this is the peak. Now is a good time to sell. You can use 1,000 different indicators, but as far as I'm concerned, we don't need all of that. We need to look at the Federal Reserve, what their intentions are, and then their actions. And, we can see. We can see what they're doing right now. It's very slow, but we can see. And as a result, if all the other central banks are not going to print either, and they're supposedly going to, dry up that liquidity, well then, we're in big trouble. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, helps to support me. So I do appreciate that very much. All you got to do, hit that thumbs up. And that's it. You've supported me. If you want to support me in other ways, then definitely become a subscriber on here. Join over 100,000 other people around the world on the channel that is literally grassroots driven. The people on this channel, there are so many people that are informative, that are knowledgeable, and you can learn a lot, not just from the video that you see, but in the comment section. So that's one thing that I find that's better here than any other channel. The comment section is often filled with so much knowledge, and that's thanks to you. So that's all. If you found the video informative, I know that you will find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you got to do is go over to Amazon. There's a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.